Hello and welcome to Your Stocks in the Mumbai newsroom. I'm Ekta Batra and with me is Vijay Parekh. Well, it's turning out to be definitely a weak session. We've started the week on a weak note. We have the mid-cap index, which is down around 1.8%. We have the small-cap index, which is reeling under pressure, down around 3% and this is important because these have really been the indices which have outperformed on a year-to-date basis. On a year-to-date basis, at current reckoning, for example, the small cap index is still up over 25%. We had the mid cap index at one point in time, which was up around 30% on a year-to-date basis. And that's exactly where a lot of the SIP money was going as well. So let's see whether this is just a start of a longer correction. But this is the largest one-day fall that we've seen for the mid cap as well as the small cap index in a month. As of now, the advanced decline ratio is telling of the weakness that we're seeing in the broader markets. We have around 300 stocks advancing to around 2,700 stocks declining on the National Stock Exchange, and even specific indices. For example, the BSE 100 stocks only has around 14 stocks advancing and around close to 87 stocks declining. Similar with the BankX, 2 stocks advancing with around 8 stocks declining within the BSE BankX. So that's the picture right now. Specific stocks seeing profits being taken off the table.
Oh, absolutely. I mean, you don't see this kind of move coming through every day. And this is a complete global sell-off that we're seeing. Ever since the morning, you've had Asia, which is under pressure. We did get that weak handover from the US. All of those markets still severely under pressure. There's cuts of 1 to 1.7% that I'm seeing across Asia right now, the ones that are trading, that is. And our markets, a lot of the stocks which are very actively traded, the ones that we look at on a regular day-to-day basis, pick up the mid-cap losers, and you'll see cuts of 10 to 15% on these names. So that is the kind of pressure that we're seeing in this market. But let's do one thing. We'll try to invite our guests and really make sense of what we are seeing across the markets today. We have Vijay Chopra of EnochVentures.com as well as Vaishali Parekh, Head of Technical Research at Prabhudas Lilladher, to answer all of your questions. Vijay, Vaishali, thanks a lot for joining us today. Vaishali, just take us through, how you are reading this. We started, and we're still holding up quite all right on the frontline index, but a bulk of this pressure and very intense pressure coming through on the broader markets. Do you think that this is something that's going to extend over the next few days as this sort of uncertainty really looms?
Very good afternoon, and thanks for having me on the show. But yes, this was quite an indication right from Friday, especially if we talk about the mid-cap index. It was showing a lot of exhaustion, and that's where we started seeing the profit booking emerging. And today now, Nifty also has just the first day of the week, and we've seen the crucial support of the week of 19,500 to 450 levels broken. So I think there is a scope for further downside coming in. I would be looking at 19,200 from here on. And even Bank Nifty not sustaining at higher levels. But yes, when you compare it with Nifty, it is still holding well. But yes, Bank Nifty also is in a weak zone.
Okay, well, we have Vijay Chopra joining into this conversation as well. Vijay, I'm sure you must be having a lot of your clients, where you must be fielding questions that, is this the start of a larger correction that we're seeing in the broader markets? Should we be taking money off from from stocks which have done well and which have already given us returns? That's probably the big question that a lot of the retail investors have on their mind at this point in time. From that perspective, what would you advise them?
Well, my advice would be, first of all, do not panic. Panic in the market generally, creates, another set of problems, which is, it's a widespread sentiment which goes bad. So I would recommend that, keep on booking profits. And I've been recommending this on your channel as well, that wherever you have good profits on the books, on the table, keep on booking and, shift to a stock where you are getting a better valuation. So this is something very normal in the market. But again, why the markets are in a dizzy is that, this war can probably go either side, and, it might get worsened, over the period of next few weeks, because most of the countries are, the Islamic countries are jumping into the bandwagon, and they are supporting Palestine, and Israel and US are against them. And, Israel has been, bombing Palestine incessantly. So, there are issues. People are worrying that, what will happen to crude. Now, if crude boils to 120, it can, ruin the balance sheet of several countries. So definitely there are worries. But yes, in this worrisome time, hold your nerves. just don't sell everything and go away. Especially, good stocks. People generally tend to lose their holding on good stocks whenever there is this kind of a sell-off. So don't sell good companies. Goods, they would definitely come back. I have time and again said that, good stocks are like tennis balls and bad stocks are like eggs. Yes, exit bad balance sheets, exit leveraged balance sheets, exit those companies which have, weaker fundamentals, but fundamentally strong companies, no need to panic. They correct and they come back. So I would say that, just hold the nerves and no need to just sell off and run away from the market. So whatever the retail investors say, but my recommendation is, after being almost for 30 years in the market, don't worry too much. Good stocks and good companies are going to come back very, very sharply.
All right, that's very helpful advice for maybe someone who's watching and is sort of getting afraid of this kind of situation where in a single day you've seen an over 2% kind of fall in the broader markets. But let's also try to answer some questions right now and just get in some queries, because we have a lot of them coming in from the mid-cap space as well. We have Sunil S, who's actually on the line from Pune, and he has some investments in Escorts, Kubota. Sunil, thanks for writing in. Please take us through your query. Both of our guests are on the line as well, and I'm sure they'll be able to help you out.
Yeah, thanks a lot. Thanks a lot for picking up my question. So I've entered Escorts approximately 2 years back at 250 when Kubota was not in picture. But since then, I've been holding Escorts, 300 shares at 1250. My question is, should I stay long? Because I'm looking at a picture of maybe 3-5 years, even for a future. That's my question. So is it long term? Is it a good hold? Or should it be a target-based profit booking at some point?
All right, let's try to get in both of our guests on this. Vaishali, thoughts on Escorts, Kubota? He has been holding for 2 years, since 1250, and he's saying he's willing to hold for another 2 to 3 years. What would your recommendation be to someone like this?
So I would say, of course, the stock has really run up and it continues to show strength. But when I'm seeing the weekly and the monthly chart also, it has given a one-way rally. So 3,000 should be the near-term support levels. The trend is intact as long as 3,000 levels are held on. But if we see a decisive break of this level, we could see some profit booking coming in this stock. So of course, why not? If 3,000 levels break, then partial booking or profit booking should be done to take the opportunity to add further on at lower levels. So that would be my view for Escorts.
Okay, well, Vijay, would you have a view?
Well, I think that, one can book profits, be in large caps right now. Look at the results what ICICI Bank has posted. So, you can be in large caps. Look at Reliance. I think that, somebody wants to get into Reliance with a longer term perspective. Why not buy Reliance and sell Escorts? So, get into good balance sheets, as I said. And I think that, the potential market gives you a lot of opportunities. In such times, you can get quality stocks. Why not buy an ITC for a longer term? So you have lots and lots of profit on the table. So why not book Escorts and, get into, split your money into ITC and Reliance?
Okay, all right. Let's get in another query now. We have Deepak Dave, who writes to us from Gandhinagar. He holds 600 shares of Biocon, which he's bought at 315 rupees. He wants to know whether to hold or to sell at current levels. Well, Vijay, let's toss this over to you, because Biocon, is starting a whole new journey. They've managed to integrate with the Viatris business in most major markets. So based on that, earnings are probably going to look different, but they do have the debt to reduce as well. So overall, what would you consider in terms of Biocon as an investment and your target price?
Well, I think that Biocon should be sold on any rise, and I would prefer to be in something like, a Dr. Reddy's. As I said, be in large caps. So large caps are much safer than mid caps and small caps. So Biocon sell on rise is the strategy. So I would say that keep a very strict stop loss of about 220 and hold right now. And if it comes back, sell and shift to Dr. Reddy's. So be in large caps. There might be some kind of a surprise markets, can see in the coming days. But, the chances of losing in large caps is much lower than those in mid caps. So I would recommend, shift to a Dr. Reddy and sell Biocon on rise.
Okay, sell on rise. Vaishali, what are your thoughts on Biocon? This is someone who's got in at 315 and he wants to know whether he should hold or sell this. I don't know how long he's willing to stay invested, but let's say he's a long-term investor.
Well, so if I would say that technically, I think the worst is pretty much over. So I would take it as a trading strategy. The first target that I would look from here on is 270, and if we sustain above that, I would be looking at a target of 320. So that would be my trading range. And I would say that if he wants to exit, because as Mr. Vijay said, that yes, I do agree, frontline stocks, but for a trading strategy, this can turn out to be a favorable trade, and 320 would be the target. So, of course, I am also bullish on Dr. Reddy technically also, because we are looking at a target of 6,000 from here on. So, well, the choice is his, but I would recommend Biocon as a hold for sure, because 270 and 320 would be my tentative targets.
Okay, got that. That is the call coming in on Biocon and also on Dr. Reddy's. One more query before we wind down on the show. We have Natarajan Ramanathan, who writes in from Chennai. Now, he holds 2,000 shares of Suzlon Energy, which he bought at 12.5, currently around 33 rupees. So he is making money there. He says he's a medium-term investor and wants to know whether to hold or to sell this stock. Vaishali, how would you look at something like a Suzlon? I mean, today it's, he is sitting on some profits right now. He bought at around 12.5, currently around 33.
I would say definitely book partial profit for sure. Even if it's about a medium term, no harm booking, because all the time period charts that I'm seeing, weekly, monthly, all in deep overbought. So, I think it's prudent to book partial profit and again keep buying at lower levels, say around 28. That would be a next support level to look at.
Okay, all right, Vijay as well as Vaishali, we're going to let you go on that note. It's been a pleasure hearing your views. Thank you very much for joining in and speaking with us. Well, we leave the markets in a difficult position. It's not as much about the mid and frontline indices as much as it is about the broader markets this afternoon. We have the mid-cap index, which is down close to 700 odd points, and we have the BSE small cap index, which is sharply lower in today's trading session. That's all the time that we have on the show. Do stay tuned. And do remember to email us all of your questions. We have closing bell coming up next. Stay tuned.